Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock, including news of a big sell-off. Equity markets in New York lost 2% on Friday. Bond markets saw yields fall sharply, with the benchmark US Treasury 10-year bond yield falling to 2.72%, its lowest since November. For us, that means a sharp dip in swap rates and further flattening of the curve. It also saw our currency shift a little lower as we were dragged down by the Aussie. The underlying reason for all this sell-off is a rush to safety and a rise in risk aversion, all prompted by growing fears of emerging markets like Argentina, Thailand, Russia, Venezuela and Indonesia, even Malaysia and South Africa, that those markets will all struggle to handle the fallout from the US Fed's tapering. And the signs are not good in those emerging markets. They seem to have made little preparation for the consequences of a rise in interest rates and the end of cheap credit. This Thursday, we'll get to know the extent of the Fed's tapering speed. They cut back by $10 billion per month in December, and most experts expect a similar move again this week, reducing the $85 billion in stimulus per month to $75 billion and now to $65 billion a month. The bond market rally sort of helps them because they don't have to worry about yields spiking as they turn off the tap. The Fed decision will come just before the RBNZ's own OCR decision. The markets rate it a higher chance of an OCR rise than the experts do, but perhaps the emerging market turmoil is tempering those market bets. Over the weekend, ECB boss Draghi said there had been a dramatic improvement in the Eurozone's recovery. The IMF boss, however, kind of rained on his parade, saying she worries about the fragile nature of the EU improvements and especially worried about the threat of deflation. For something slightly different, the Chinese media has identified New Zealand as a top holiday destination for their heavy hitters. Despite our currency, our tourism industry is doing very well at present. New Zealand dollar starts today a whole cent lower at 82.1 US cents, 94.5 Aussie cents, and the TWI is at 77.8. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.